It looks like it's Warren Buffett's turn to say, "I told you so." Late last year, while the S&P 500 was notching over 50 record closes, Buffett was quietly selling stocks. Many investors were left scratching their heads, wondering why the Oracle of Omaha was pulling back when the market was on fire. Now, the answer couldn't be clearer. The stock market's 2025 slump has proven Buffett's fourth quarter moves to be incredibly well-timed. The latest 13F filing from Berkshire Hathaway, which details the firm's stock holdings, shows that Buffett was going against the crowd while Wall Street was celebrating new highs. At a time when bullish investors were still pouring money into the market, Buffett was quietly cashing out. Big time. In just the last 3 months of 2024, Berkshire Hathaway sold approximately $5 billion worth of Bank of America shares, $3 billion worth of Citigroup stock, a large portion of NU Holdings, a Brazilian fintech company, major cuts in Charter Communications. But here's where it gets even more interesting. Despite being a net seller throughout 2024, Buffett made only one significant purchase in the quarter: Constellation Brands, the company behind popular alcoholic beverages. Other than that, Buffett was selling, and selling. And the result? Berkshire Hathaway now holds more cash than any other U.S. company. Why Buffett's market timing was impeccable. When Berkshire Hathaway released its 13F filing in mid-February, many financial experts began putting the puzzle pieces together. Barron's columnist Andrew Barry made a bold prediction. Buffett has been out of step with the markets before, including during the internet bubble of the late 1990s. He was vindicated then and could be rewarded once again. And it didn't take long for that prediction to come true. Since Berkshire's filing on February 14th, the S&P 500 has dropped nearly 5%, erasing all the gains from the post-election rally in late 2024. By the end of Tuesday's trading session, the S&P 500 had fallen to its lowest level since November 4. Hindsight is always 20/20, but looking back, Buffett's decision to sell at market highs now seems like a masterstroke. At the time, some analysts criticized him for being too conservative, but now, those same critics are scrambling for answers. Why Buffett sold at market highs? 3 key reasons. So why was Buffett selling stocks when most investors were still riding the bull market? There are 3 major factors that likely influenced his decision: rising trade war risks, inflation and the Federal Reserve, sky-high stock valuations. Let's break them down one by one. The return of trade wars. One of the biggest concerns for Buffett and other top investors was the return of trade tensions. During the 2024 presidential campaign, former President Donald Trump made it clear that he planned to use tariffs aggressively if he returned to office. Many analysts brushed off these comments, assuming they were just campaign rhetoric, empty promises to rile up voters. But now, just months into 2025, it's obvious. Trump was dead serious. Since returning to the White House, Trump has already reinstated tariffs on Chinese goods, threatened new tariffs on European imports, increased pressure on Mexico and Canada through revised trade policies. This move has shocked investors, reigniting fears of a global trade war, similar to what happened in 2018 when Trump's tariffs on China sent the stock market tumbling. Buffett saw this coming. In fact, over the weekend, Buffett himself called the new tariffs an act of war that would further damage the U.S. economy. Trade wars create uncertainty, disrupt global supply chains, and push prices higher. All bad news for stocks. The Federal Reserve's inflation battle beyond tariffs. Buffett was likely concerned about something even more fundamental: inflation. Even as Wall Street remained optimistic, inflation remained stubbornly above the Fed's 2% target throughout late 2024. Many investors were betting on rapid interest rate cuts, expecting the Federal Reserve to loosen monetary policy. But Buffett, he knew better. The Federal Reserve, led by Jerome Powell, had already signaled that rate cuts wouldn't come as quickly as investors hoped. Buffett likely anticipated that if the Fed remained hawkish, stocks could fall fast, especially high-growth companies that rely on cheap borrowing. And that's exactly what happened. As soon as the market began adjusting its expectations, stock prices plummeted. Buffett's decision to increase cash holdings now looks like an incredibly smart defensive move. Stock valuations were out of control. Perhaps the biggest reason Buffett was selling comes down to one thing: valuation. By the fourth quarter of 2024, the stock market was hitting record highs, and companies were trading at extremely expensive valuations. Stocks weren't just overpriced compared to their historical averages, they were also far more expensive than stocks in other global markets. At those levels, there was zero margin for error. Buffett knew that if anything went wrong, whether it was geopolitical instability, inflation, or a slowdown in consumer spending, stocks could fall hard and fast. And that's exactly what we're seeing now. Buffett wasn't alone in this thinking. Corporate insiders, CEOs, CFOs, and board members were also selling stock at a rapid pace, locking in profits before the market turned south. Buffett simply did what he does best. He followed the numbers, ignored the noise, and made the smartest long-term move. What's next for Buffett? So does this mean Buffett is done with stocks? Not even close. In his most recent letter to shareholders, Buffett made his stance very clear. Despite what some commentators currently view as an extraordinary cash position at Berkshire, the great majority of your money remains in equities. That preference won't change. Buffett isn't abandoning stocks, he's just waiting for the right opportunity. With Berkshire Hathaway's cash reserves at an all-time high, Buffett is in the perfect position to strike when the market presents better deals. Once again, the Oracle of Omaha has proven why he's one of the greatest investors of all time. While most of Wall Street got caught up in the hype of record-high stock prices, Buffett saw the risks and acted decisively. Now, as the market corrects, one thing is certain. Buffett was right. Again, the real question now is, will Buffett start buying soon, or will he wait for stocks to fall even further? Let me know your thoughts in the comments below. And if you found this analysis helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an update